Welcome to this video, which is about stock screening. Hello, I'm Peter Martin with Trading 212. In the last few of these investment videos, we've been talking about various valuation metrics. We've looked at some of the more popular ones. We've looked at the PE ratio and the PEG ratio, and price to sales and price to book. And now that we know what those are, we're going to look at how we can use them when stock screening to help us look for value opportunities. So what is stock screening? Well, very simply, it's a way of whittling down the number of stocks that you're looking at according to criteria that you've set yourself in order to screen out the stocks that you aren't interested in. Obviously, there's thousands and thousands of stocks that are available to invest in. Screening helps you find the ones that suit what you're looking for. Now, if you're wanting to do this, obviously you're going to need a stock screening tool. I'm not going to recommend any. If you do a web search, you will see that there are plenty available. Like most online tools, there are free ones, and then there's more pro-leaning ones where you pay a subscription fee in order to use it. Obviously, if you're just starting out and you're just finding out whether it's something that you're interested in, it's probably a good idea just to start with a free one. The free ones have plenty of functionality. They might be missing a few things that are on the subscription ones, and they might have ads and pop-ups, so they're maybe a little bit more annoying to use. But even after you've begun, you may find that you're perfectly happy with the free one. Obviously, it just comes down to the individual. And then when you're using your stock screening tool, you basically set up your screen by, as I said before, by setting up various criteria that you're interested in. So a very simple one, just to give you an example, might be to set up your first filter by geographical region. You might be interested in America or Europe or the UK. So for example, you might just say, set your filter to only show UK stocks. And then you might filter according to market cap, just by company size. You might be interested in big cap or mid cap or small cap. Different investors have different interests. So let's say, for example, you set it to just be big cap. You want to look at the big companies. And then you might add one of our valuation metrics as a starting point. So very simple one, you might specify a PE ratio below or equal to a certain level. So once again, these are all just examples. You might set the PE ratio to be below 20, say. And each time you add one of these filters, you'll see that the number of stocks that you're looking at is being reduced. As you start, you might be looking at tens of thousands of stocks, and as you add a few filter, that might come down to a few thousand, and then you add another filter and it comes down to a few hundred. The ultimate number that you arrive at really just wants to be a manageable number. There is no right answer. It will be different for different people, but let's say you keep on adding filters until you get down to, say, 20 or 30, and that might become more manageable. Screening with a stock screener is just really a starting point. When it spits out a list of companies for you to look at, it doesn't mean that these are the ones you must go away and invest in. It just means here's a starting point, companies that have met the criteria that you've set, and now you really need to go away and do a bit more hard work of actually looking into the companies to see why they appear to have these values. For example, when you've got the companies in front of you, your list of however many companies, you can then sort by various metrics. So you might sort according to price to sales or by price to book, starting with the lowest going out to the highest, so that you can see which company's got a really low price to sales ratio or which one's got a low PE ratio. And then, as I say, start looking at really the ins and outs of the company, looking at things like how does its balance sheet look, what is its business plan, are there any reasons that explain why it's got such low valuations, or is it really just good value? So let's now take a quick look at a simple example to just try and illustrate this a little bit. So this is just to very quickly run through a simple screen that I ran, and it's just for the purposes of illustration. This is in no way any kind of recommendation, and I'm not suggesting that these are suitable steps. It's just to show the idea of what I've been talking about. So I began looking at over 200,000 stocks, and the first screen that I applied was to only look at large cap stocks, and that brought the field down to about 150,000 stocks. And the second screen was for a PE ratio of lower than 25, and that reduced the field to around 125,000 stocks. And the next filter that I added was for 5-year earnings per share growth of greater than 10%. That brought the number down to roughly 30,000 stocks. And then the next screen was for UK stocks only, and that greatly reduced the number that we were looking at. That brought it down to the region of 2,000 stocks. And then another filter I applied to reduce it further was for non-cyclical goods and services. So this is starting to look at industry and sector, and that brought it down to just around about 150 stocks. And then the very final filter I applied was for a PEG ratio of lower than 1, and that gave me a short list of stocks of fewer than 20. And then I sorted it by various fundamentals just to see how things looked, judging it by various different measures. And sorting by price to book ratio put British American Tobacco near the top of my list. So here we can see a chart of British American Tobacco. This is a weekly chart, and we can sort of see what the price has been doing. As I said before, this is just the launching point. It's giving us a few stocks to look at and explore further, and at this point you need to start looking into the company in a bit more detail. So for example, I did a new search on British American Tobacco, and we can see that on the chart the price has been dropping quite sharply this year, which sort of explains why we're getting these low valuation numbers. And there's a few stories out there about that the company has cut its sales targets, and that the US is set to restrict e-cigarette flavors. And just looking at those few things might colour your thinking about whether you want to invest in the stock or not. But obviously you want to look further at a range of items to get a full understanding of any company that you're looking to invest in. And obviously, as I said, this was just for the purposes of illustration. So this video has been a simple introduction to stock screening. I hope you enjoyed the video. If you did, please hit the thumbs up button and give us a like. Or if you've got any feedback, why not send us a message in the comment section. We do read through every comment we receive. And we do upload new videos on a regular basis. If you click on the alarm bell icon, then you'll get a notification the next time we add a new video to YouTube. But that's all for this time from me, Peter Martin, and Trading 212. Thanks for watching, and I'll see you next time. Goodbye.